Let's do this. Welcome to Silicon Global Ask the VC show. Today we have Pocket Sun from SoGal Ventures joining us from Vancouver. Hello, Pocket. How are you today?
Hi, nice to join this session. I'm doing great today and excited to meet new people and answer questions.
Okay, good. I hope we get a lot of questions. You can put those in the chat box whenever you feel like it, and we'll get to them. I'm going to keep monitoring them as we go along. So thanks for joining us. Really appreciate everyone who's signed on and participating with us so far. A little bit about what we do, a little bit about me, founder, editor, author, online host. Never knew I was going to be an online host until COVID hit, and we took all of our events online. In the meantime, during COVID, I wrote another book, which will be out soon, but I've already done 3, so I don't know what's wrong with me. I don't know why I need to do a 4th one, but I did, and I think it's my best one. Hopefully you'll be hearing more about that soon. Now, I know a lot of you have joined us who are Silicon Dragon Circle members, and that is a real privilege. It gives you access to all of our events for the year, and that's year 2022, not 2021, but 2022. And you can join by Silicon Dragon Circle 2022.eventbrite.com. That gives you a lot of favorites, like our events and like introductions if you want from us. And I know a number of you on the show are members, so really appreciate that. We can't do the show without you. And without the support of some of our longtime supporters like Invest Hong Kong. So thank you. Okay, let's get to our show. Let's get to the heart of this show with Pocket, who's joining us from Vancouver. Okay, as we usually do, a little introduction first. Okay, Pocket is joining us from Vancouver. She just got back from China, 10 months in China, so I'd love to hear a little bit more about that. She founded SoGal as a grad student at USC, and that's actually where I met her a number of years ago. And from the very start, when I met her, I knew that she was destined for, bigger and better things, and certainly she's done that. She founded SoGal Ventures. She founded SoGal Foundation. She has a partner working with her. She's been a TV presenter. She got her bachelor's at William & Mary, her master's at USC in entrepreneurship and innovation. Okay, that's a little bit about, and I hope all of you saw the picture here of Pocket on the cover of Forbes Asia. After I met her and I said I knew she was destined for bigger and better things, I recommended her as a candidate for the Forbes Asia 30 Under 30, and she made it, and then I profiled her, and that's her on the cover. So we're circling back years later after Pocket has been very successful. And okay. SoGal Ventures launched 2016, first female-led Nextgen VC firm backing women and diverse entrepreneurs. Investing in North America and Asia. Fund 1, $15 million in 2017. Fund 2, $100 million and closing. 2 partners, 2 unicorns, 1 more to come. What sectors do they invest in? Future of work, consumer tech, digital healthcare. Investing, and maybe I should let Pocket tell a little bit more about the investment strategy. So let me stop the share here for a second and let Pocket tell us a little bit more about what sectors they're investing in, the focus, and some of their standout deals. So Pocket, please tell us.
Cool. Thanks, Rebecca. So I think your nomination of me to Forbes kind of really put me on a different trajectory in terms of my career and helped me really establish a place in VC when the industry didn't, really welcome different voices at a time. So big thanks to you, and really happy to be here. So 6 years later, we've gone through a lot. We launched 2 funds. We have done 44 investments through the 2 funds so far, 42 from Fund 1 and 2 new deals that we just closed via Fund 2. On top of that, my business partner, Elizabeth, and I have invested in over 100 companies in total from all over the world. And that includes our early angel investments, and Elizabeth also co-founded 2 funds specific for Johns Hopkins University. So before we founded the first fund of SoGal, we actually learned a lot about raising a fund, managing a fund, and investing out of a fund, managing the taxes, legalities, and everything through the Johns Hopkins fund experiment. And that's also doing quite well. So we had a very successful run with Fund 1. We set out to really prove that investing in women is not a charity. It actually yields superior financial returns. And for how many years later now? 4 years later, 5 years later, we have amazing portfolio track records to really prove that thesis to be true. So in Fund 1, we have seeded 2 unicorns and 1 that's almost a unicorn valued at 812 million now, and 2 IPO events we're expecting this year and next year, plus a lot of up and coming, fast growing companies that are still very early in their journey. So our Fund 1, kind of this sky is the limit. We have high expectations for the final outcome of it, but we have a group of very global and happy investors in Fund 1. And over about half of them have already returned to Fund 2, and we are just starting on the Fund 2 fundraising journey.
Okay, well, tell us a little bit more about these unicorn companies and also the ones that are poised to go public.
Yeah, so it's quite a coincidence that the first and second investments in Fund 1 both became unicorns in the same month, in December 2020. So that was a great month for us.
Okay.
And we invested in both these companies in seed stage in Q1 2017. So in 3 years-ish, they became unicorns. So it was faster than we expected, but nonetheless worth celebrating. It's really helped us have a lot more, like feeling of security and comfort, because I think the beauty and the curse of being a VC is that you are taking a test now without knowing the test results until many years later. As a VC, you're constantly challenged to evolve and learn and kind of self-reflect. So these 2 unicorns are, one is Function of Beauty. That was our first fund investment. It's a world pioneer in custom beauty. So back in 2017, they had this amazing offering, and they were almost also like first to market in creating one-off formulations for consumers. So they started with hair care, where you can customize your entire formula based on a hair quiz. They can create like billions of different combinations of all vegan, sustainable, cruelty-free ingredients. And they also own their own manufacturing, which made us feel like, that's something really special, that they can own their factory, own their manufacturing from such, an early stage. And indeed, it became a great barrier to entry, and also a great competitive advantage for them. So
where is that company based?
They're based in New York. The headquarters.
Okay. They have their own factory. Where's their factory?
Factory is outside of Philadelphia.
Okay.
Yeah. So that was our first unicorn. And then the second unicorn is called Everly Health. It was originally Everlywell, and last year they acquired 2 strategic companies that Everlywell used to be a very small client of theirs, and last year Everlywell actually acquired them to be part of the Everly Health umbrella company. And so Everlywell was founded by Julia Cheek, who is a solo female founder based in Austin, Texas. And the amazing thing about them is that in 2020, when COVID hit, despite being just a 90-person team in Austin, Julia actually led Everlywell to become the first company in the US to develop an at-home COVID test. So to date, they have delivered over 45 million COVID tests across the US. And they were also the first one to get FDA approval for emergency use on those test kits. So COVID actually really helped drive the growth of the company. And now they're worth over 3 billion, let's say. And they recently acquired another company that's all about women's fertility tests and supplements. So they are expanding their offering to a range of, I think, 30 to 40 different tests that you can do at home, plus, the lab partners and the newly acquired company called Natalist, which helps serve the fertility market.
Okay. So now back when I met you at USC, which is a great school, there's so many great entrepreneurs and venture people who came out of USC. I don't know what it is that's special about USC, but maybe you can tell us. And why did you want to be a VC so early? I mean, you started down this path as a graduate student.
Yeah, so I studied entrepreneurship and innovation at USC, and it was really an accident. I was working in Chicago, but couldn't get my H-1B work visa as a foreign student. So I was either gonna go back to China and work somewhere else, or I could stay in the US and go to grad school. So at the time, I decided to go to grad school, and USC offered this program, the entrepreneurship program, as a master's degree for the very first time. So it was pretty flexible. You could finish it in a year or 2 years. And they also gave me the best scholarship offer out of all the last minute offers that I got. So it was, truly pretty accidental that I ended up at USC and entered the entrepreneurship space. In the beginning, I was not expecting much at all. I thought, this is a fun topic to learn about, and then I'll go back to Chicago, work at, somewhere like L'Oreal or Unilever, because I'm very passionate about brands and consumer and kind of changing behaviors, creating, movements. But being at USC, getting exposed to the dropouts, the entrepreneurs that came back to speak in the classroom all the time, very quickly shifted my entire perspective on my career and where I could be. So I decided that I need to be an entrepreneur. Like, I need to do something that directly serves the purpose that I'm passionate about. So very quickly, I found a big problem, and that is I was always one of the only women wherever I went. So I wanted to use what I learned in the classroom and do something. So SoGal first started as a community for young women to learn about entrepreneurship. And very quickly, we hit product market fit. There were so many women who were passionate about tech and startup and entrepreneurship but didn't know where to go, and there was no friendly space for them. And then I started growing the community, and then very quickly I again realized that the biggest bottleneck for women entrepreneurs are access to funding. So that's when I realized that I need to learn about venture capital. I need to somehow get into that world and help these women get funding. So then I went to Stanford for an executive program about VC, and that's where I met my current business partner, and we really hit it off. We were the youngest in the program, and we were just so inspired by the people that we met there. And for the first time, we had this idea that we could be VCs ourselves. Like we can start a fund and, you know, directly solve the problem that we saw. And it was kind of a groundbreaking, wild idea. And back then, Silicon Valley did not welcome people like us, you know, young women, Asian, like no finance experience, no investment banking experience, like no operator experience, not a Facebook employee number 5. So it took us a lot of preparation, a lot of courage, and a lot of, you know, like self like pep talk to be able to go over all the initial doubts that we had about ourselves and realize that what we are about to do has tremendous value and this ecosystem needs it. So we really wanted to create kind of this pioneering model so that other women, other diverse, you know, underrepresented people who want to break into VC could, you know, follow our path. And that has exactly happened in the past few years.
Okay, so what was that model then? I remember that you created this foundation, and all of a sudden there were these SoGal foundations around the world. You know, there would be one in Singapore, there would be one in Beijing, there would be one, you know, there are all these chapters that evolved out of your mission. And
yeah,
that really helped you tremendously, right?
Yeah, SoGal started as a community and we continued to build out that community element. So because we were building something unique where women felt safe and comfortable and, you know, free to talk about tech, to talk about their ambitions, and, you know, they would be encouraged, they would find peers who support them and mentors and like resources. So it kind of, you know, it had legs. It was spreading all around the world. People were bringing the SoGal concept to their local cities. So we were really spreading like wildfire all over the world. And that became a huge source of our deal flow and a huge, you know, source of our credibility and, you know, brand recognition. And also because we were the first one to create this global first, women focused VC, you know, thesis model. We got a lot of media attention, including, you know, the Forbes nomination, and we were on Bloomberg, we were on, we got on New York Times, Wall Street Journal, Fortune, like everywhere. So that created a lot of, I guess, like inbound interest in what we do. So we were able to we did a lot of market education for sure. We had to teach people and like tell people, you know, investing in women, like that's what you should be looking at. Forget about, you know, AI, VR, like all that stuff. That's, you know, what we call small trends. Like these are trends that will last, you know, 3 years, 5 years, 10 years. But investing in women and investing in diverse, underrepresented minorities, that's a trend that can last you 50 years, you know? So we were, you know, we were there first, and we had to create really innovative ways to raise money, to build a brand, to find our deals, and create a new way of operating a venture capital fund with just 2 women. And I was in Singapore soon after we, you know, had this idea, and my business partner was in New York. So we were, you know, also globally distributed on top of, you know, being already very unusual in the VC space. So we just had to really do things our own way, including how we find LPs, how we, you know, talk about ourselves, how we approach entrepreneurs, what kind of entrepreneurs we target and how we serve them, and the ecosystem approach that we have always taken. So I'd say everything about SoGal is a bit different from the rest of the industry.
Right. And, you know, one of the things that you mentioned as a major accomplishment was getting Walmart on board. So how did that happen?
Yeah, so Walmart is now a partner for our nonprofit. They have provided a pretty significant grant for one of our initiatives called the Black Founder Grant. So we started this initiative last year, actually in 2020, in the heat of Black Lives Matter. We realized that Black women founders and non-binary founders are facing even more funding struggles than, you know, just the average women founders. So we decided to create this grant program. So far, we've raised about $1 million for this program alone. We have Walmart as a big corporate partner. But what's really astonishing is that we have received over 100,000 applications for this program alone. So imagine, like, there are over 100,000 Black women and Black non-binary founders who have, you know, not raised much funding before, who have great ambitions to build, you know, businesses of the future, the next billion-dollar business. But they are kind of the blind spot of the VC ecosystem right now. So we see this as, you know, a very sustainable and a massive deal pipeline that we wish to look into even more this year. And it also keeps giving us that edge in finding unique entrepreneurs that the rest of the industry isn't looking at.
I see. So now with this new fund that you're working on closing, will you be expanding after that? Because it's amazing what you and Elizabeth have accomplished since 2017, already on Fund 2, and all those investments that you've made, and a couple of unicorns and some that are going public. I mean, what's the next step? Are you gonna, can you top that? And yeah, just tell us a little bit about your expansion plan.
Yeah, we've always been very ambitious, and we always saw SoGal as a startup. It's not just, you know, a venture firm. It will grow with us, it will evolve. So currently we joke that we are going from seed stage to Series A with our second fund. So with Fund 1, we've achieved very fantastic industry-leading numbers when it comes to performance. We have so many markups and just amazing overall metrics that not only, you know, like show that we are good, disciplined fund managers, but also show that the demographic that we're going after, women, underrepresented founders, have huge potential to generate really outsized and make some good money out of it too. So because of that, we are very careful about who are the LPs we bring on, because we want to be very selective of who we want to make money for. And these days, entrepreneurs care about these things more and more. They want to know, you know, if I become successful, who do I make rich? So we are very cognizant of that. And we always want to expand access for people to get involved with venture, with venture capital as an asset class. So yeah, one thing we're doing is we keep growing our LP network. We currently have over 150 LPs between the two funds. Many of them are repeat LPs, and we have a lot of young women as LPs, which is, you know, very unique about us. In Fund 1, we had 73% women as LPs, and over 50% of our LPs are people of color. We also had Macy's as our biggest LP in Fund 1. And we were probably also the first VC fund to run a pop-up, like a retail offline pop-up with Macy's, such a large national retailer, to showcase 12 women entrepreneurs who were bringing their brands offline for the very first time. So I think our LPs help us, you know, innovate. They help us be very resourceful, and having, great sources of expertise when we need to tap into their wisdom. So I think that's something very special about what we have built.
Okay, so what makes a female entrepreneur better than a male entrepreneur?
I wouldn't say better or worse, but it really comes down to opportunities. So last year, overall, startups got the highest funding in number, I think, in history. Like $330 billion went to startup companies. That's a record. And at the same time,
Huge year.
but at the same time, only $6.4 billion went to women-led teams. So that's like less than 2%. It's like 1.9% of all the funding
Right.
of VC went to
Sure.
female teams.
Oh yeah.
So, it's really not about, women being better or worse. I think individual differences always trump, collective differences, like gender differences. But I do think currently, a lot of mediocre male founders could get funding, but, mediocre female founders have a hard time getting funding. So, and when, only 2% of funding goes to women entrepreneurs, that means, a lot of the potential is untapped. If, women entrepreneurs can't really rely on VC funding and they have to bootstrap, or they have to take on bank loans to make their business dreams happen, then they're losing from day one. Like, how do they even compete when, the male competitors could throw, millions and millions on ads and take up entire market shares? So I think, one, like, women entrepreneurs deserve more opportunities, and they are performing better, actually, due to, like, you can check some statistics showing that, women return higher than male founders. They exit faster than male founders. When raised the same amount of money, they actually create 35% higher revenue than male founders. Like, all sorts of stats are there. So opportunity is a huge one.
That's really interesting. So what's the source of some of that data, that information about the performance?
Yeah, so many institutions have already produced stats around that.
Yeah,
so
like the Kauffman Foundation or
Kauffman Foundation have done it. Let me see what else. PitchBook, I think Goldman, Bloomberg, Crunchbase, and some, I can't remember, like some other foundations have all done like similar research, and all research pretty much, points the same direction. Like, investing in diversity is good for business.
Right.
But, we often say that this is a data-driven world, decision-making is based on data, but that's not how we see it. I think if data actually gives people, alarms to make to make decisions, then things would have been different faster. But unfortunately, it hasn't been that way yet. So that's the opportunity part. I think another big value of women entrepreneurs is they have different lived experiences, and they can, create and invent things with a different point of view. So when we look at, the largest bra companies, the largest toy companies, the largest beauty companies, the largest luxury companies, these are all, consumed by mainly women. I think there's no doubt about that. But these CEOs are all men, pretty much all white men at the top. So I think there's, a big shift in how consumers want to consume products and services that are coming from people that are just like them. Women don't want to be told what to do anymore. Women don't want to be forced on some like beauty standards, or like having like social expectations or norms, like chuck down their throats. I think this creates a lot of opportunity for women and other underrepresented founders to really create businesses that solve real pain points that have been ignored and pushed aside for the longest time. So yeah, we just find like it's always the best when the problem solvers experience the pain points themselves.
I see. So how do you source these deals then?
Many different ways.
Well, what's the primary way? What works best for you?
So cold outreach works for us. We get
Really?
tons of cold pitches all the time. And I'd say another big one is, and I think the quality of cold pitches really depends on the brand you have built, right? And the specialty you have built. So we do get a lot of pretty high quality deals just out of nowhere. And then I think investor referrals is something that we can trust. So we have been working with a lot of VCs who have either similar focus or similar stage focus, or they are later stage or they're earlier stage, so we kind of help each other out. And another great way of deal sourcing is through our entrepreneurs. So once we invest in these entrepreneurs, many of them kind of became our unofficial deal scouts. They would send us deals because they've had a good experience with us. We actually have a 90 net promoter score, which is very high. So when you satisfy your portfolio founders, they bring you more quality founders. So that's a great way for us as well. And then the SoGal Foundation, our nonprofit, is like a huge flywheel of deals. Through the Black Founder Program, we see a lot of deals that others don't see because these Black founders are not even pitching VCs. And we also hosted, a huge global pitch competition before the pandemic, where we had thousands of applicants from all over the world. We hosted regional competitions in 26 cities before we brought them all together to Silicon Valley for a global finals. And we were able to make many great investments out of that. So I'd say like it really comes from many places, and we are pretty open. Like our DMs on Twitter is open, our LinkedIn message channel is open. I receive deals from like Instagram messages. So it's like all over.
Okay, are you really focused on next gen entrepreneurs, the younger entrepreneurs?
So I would say Nextgen is definitely a focus of ours. Instead of thinking of it as just the younger generation, I define Nextgen as a different way of doing business. I think previously doing business has been defined by it's growing at all costs. It's like maximizing profit, even when it means having terrible work-life balance, exploitations of workers, and ill treatment of business partners or people in your ecosystem. We want to invest in the next generation of billion-dollar businesses that embody way more compassion and empathy, environmental responsibilities, sustainability, and solid business fundamentals, and things that could actually make a real difference instead of just I don't know, like a differently packaged but like the same shit.
Okay. So now your fund invests in North America and Asia. So in Asia, how do you prioritize some markets in Asia? I know you were based in Singapore. I think You've done some in Hong Kong. How do you look at Asia as a region to invest in, and how do you prioritize your investment there? Just tell us a little bit more about the geographic focus.
Yeah, so from the very beginning, we decided to be a global fund. And back then we thought we would mainly focus on, Asia, as in probably Singapore and China, but it ended up that we invested a lot outside of North America and Asia too. Like we did a deal in Australia, we did a deal in Sweden, we did a deal in the UK, we just did a deal in Amsterdam. And angel investing, we've also done Africa, Pakistan. Like we are not really bound by geographies. I would say though, even when I first started SoGal back in like 2015, 16, I had high hopes for China. I thought, like I was witnessing this new convergence of overseas experience and background, and the design driven eyes and aesthetics combined with the superior manufacturing capabilities and the fast logistics network and the massive market size of China. So I really thought, there will be a new generation of entrepreneurs emerging in the next 5 to 10 years, creating some, world-class brands out of China.
Sure.
And I'm seeing that happen. It's a pity that I didn't participate that much in that revolution, although, I follow the news very, very closely. And I pretty much, when I went back to China recently last year, I realized that I knew more about the Chinese, like at least the consumer market, more than I thought I did. Because as you know, like China is such a big, and complex place. When I was physically outside of China, even Singapore is not that far, I felt that if I'm not physically in China, I wouldn't feel really confident in investing in China. But yeah, I've just seen such a revolution and such a wave of consumer brands and the consumption revolution and all these new concepts being spread out in China. And I would say that the consumer market is a few years behind the US. Like a lot of the concepts you've seen in the US are just starting to be formed in China, but they are developing at light speed. So I still think there are a lot of opportunities, not just in consumer, but also in like China has such a rich soil for AI applications, blockchain applications, and like people there, especially people in the traditional industries, somehow are just way more technology friendly. Like they are open arms when it comes to trying out something new. So I think China creates this very, very unique ground for new technologies to be implemented and to grow and to like really spread. So yeah, so with Fund 2, I want to invest more in China, although legal wise, it's actually really hard to do and it's getting harder. Last year we did a deal in China and it took us 5 months at least from like signing the docs to actually being able to wire the money into the company's bank account. So we definitely want to have a better plan with Fund 2. Like how can we create a smoother pathway to invest in China, because there's a thriving SoGal community in China. I have a personal brand in China. Like I think there isn't anyone doing what we do, like investing in women specifically in China. So there's a huge opportunity that I'm excited about.
Oh yeah, definitely. So well, what about the Greater Bay Area? Can you use that as a gateway to Hong Kong?
Sorry?
Can you use the Greater Bay Area the Hong Kong to as the gateway into China. You know, because you talked about the difficulty of doing this China investment, and I know it.
Yeah,
Yeah,
yeah.
I know it's being scrutinized. Of course, the areas that you're in are not exactly sensitive areas, but
Yeah, I'm trying to figure that out. I think I will need to talk to more lawyers to see, you know, how this has been done before.
okay.
And I definitely want to do it in a, you know, proper way. I know some VC peers do it in a, you know, more practical, but a little gray area way.
Yeah.
So yeah, I'm still figuring that out.
Are you thinking about moving back again to China?
Probably not this year or next year, but I think
Mhm.
China has always been, you know, such a fascinating place. I grew up in China until I was 18, and I go back pretty much every year.
Right.
So every time I went back is it's something different. It's something really tantalizing, really fascinating. So I think I will be spending time in China still, like at least some of my time in China. I don't foresee myself being like full-time in China just yet. But yeah, I have my eyes and ears on the ground in China, and we have very active, engaged communities in China for women entrepreneurs. So I joke that every female entrepreneur in China is like one degree separation from the SoGal community. So yeah, hopefully we can hire, you know, someone that helps us on the China side next year.
Okay. So what were the main differences that you saw with the China consumer market? Can you share more of the differences of the US and China consumer market? And what opportunities are there for US companies? That's the question that we have in the chat box from Lawrence Tang. Thank you,
Yeah,
Lawrence.
that's an interesting one, because in China you will get the same first part of the question, but the opposite second half of the question. Because recently I think a big trend is actually Chinese companies building entirely for Western countries brands. So for example, Outer is a great example. They're based in Austin. They do outdoor furniture. It's founded by a Chinese founder, Jia Ke, and he has kind of become this role model for a lot of Chinese entrepreneurs who want to go overseas. So also there's a brand called Shein. I think some of you probably have heard of it. It's now like way bigger than Zara, and it's completely just purely online, and it's, you know, a Chinese business, but they have Shein US, Shein Canada, Shein Middle East, Shein like everywhere.
Really? How do you
So
spell that? S-H-E-E-H-A-N?
SHEIN.
S-H-E-I-N. Shein.
Yeah. So they're all like, you know, they started with apparel, but they're like selling everything now. So I do see that trend continuing. I think, you know, China has a lot of, you know, really fast manufacturing and really sophisticated and like flexible supply chain that could enable this kind of low cost manufacturing, but selling at a premium with, you know, the branding element of the D2C revolution here in the US. So I'm seeing that happen more and more. I get targeted ads on Instagram a lot from these companies, whether it's colored contacts or fashion apparel or like cashmere, like, you know, it's happening. For US companies, I think the honest answer is I think the opportunity window is getting slimmer. In recent years, a huge trend that has taken over is the I guess the return of, or the first time really having a lot of love and I kind of like inward looking of the Chinese heritage, the Chinese culture, and the Chinese made brands. So we see a lot of, you know, the major locally grown brands like Li Ning, like going international and creating a completely new and younger presence, and really embracing technologies and becoming, more fast moving and more fashionable. And at the same time, we saw, a group of really awesome consumer brands that have really strong like Chinese culture, culture inspired designs around it. And they are now, they started in China and now they are targeting the overseas market. Like,
But what are some brand names that come to mind?
So for example, there's a makeup brand called Huaxizi. They create like makeup products that are really pretty. They're inspired by the Forbidden Palace and the other like very cultural color palettes and designs. And now they are using US YouTube influencers to kind of bring it to the US. So that's an example.
How do you spell that?
Let's see. I don't know the English name actually. That's the
here. Okay, I see.
Yeah, another great example would be, I'd say, Genki Forest. So they are.
Oh, type the name in there too, so we can all get it.
Yeah.
How do you spell that one? Genki?
Genki Forest is this like beverage brand coming out of China.
Yeah, I've heard of that. Okay.
It's huge now, and they are also entering. They are here in Canada. They are in Singapore. When I was in Singapore, like they are, going overseas like very ambitiously, and they are kind of, they want to replace Coca-Cola basically. And they started with carbonated water and tea that is like 0 sugar, 0 calories, and really, like leading the pack on healthier beverages for you. So they've been growing tremendously fast and creating a wide range of products. So that's a really interesting one, and with a very high valuation too, a very hot deal. But the differences between US and China consumer market, I think a big one is in China, there's no real D2C market. So in the US, you have Shopify, right? You can build your own site. You have a lot more autonomy when it comes to, like your branded website. And consumers are used to shopping on branded standalone websites. In China, that is not the case. In China, consumer brands don't even have websites. They just have WeChat mini programs, or they have a store hosted on Tmall or Taobao, which are both part of Alibaba. So in that case, like the D2C environment is very different. You can create a brand, but your data backend and the setup, everything is hosted on a powerful third-party platform that's this marketplace. So
and D2C, that's direct to consumer, right?
Yes, direct to consumer. Yeah.
So everyone knows.
Yeah.
Okay.
I would say a lot of trends that happened a few years ago in China happened a few years ago in the US are now happening in China, especially like the sustainable, evolution, the lowering carbon footprint and and like kind of liberating women when it comes to say like periods or underwear and things like that. Like that's happening in China now, and the whole clean ingredients, getting rid of the the toxins and the things that shouldn't be there, addictive stuff, that's happening in China too. So I feel like China is also, heading with its own innovations, and there are things that China is doing better than the US at. But consumer-wise, I think the window for US brands to penetrate the Chinese market is getting tighter because one, like China can create these brands on their own now. And two, this like inward focused consumption theory, like we want to buy made in China brands. We want to feel this, pride. We want to help Chinese brands grow instead of spending money on, American brands. Like that is growing. So I would say like child education is actually, a space where Chinese consumers still, look outside of China to seek for better products. And maybe, let me see what else. I would say like more luxurious stuff. Chinese consumers still look outside of China for, inspiration and stuff, but Chinese brands are getting, really, really competitive. And I see a lot of potential in them.
Okay. Are you watching the Olympics? And if so, what are your impressions? Because it really seems like, for instance, in ice skating.
Yeah, I just I watched some of it last night, and obviously like Eileen Gu is like the talk of the world right now. She's the girl of the hour. She's totally, record breaker, very inspirational role model. And skiing has become so hot in China, but in China it's a very elitist sport still. It's very expensive, and it's just starting to get really, really hot. And I think part of it is because of the Winter Olympics that was going to happen. So probably there was some, I guess, like incentives for the government to promote winter sports before the Olympics. But I see that trend not stopping. I see it continuing. And I think skiing is actually a big opportunity in China. And I also think the Winter Olympics shows us that, like where you come from, like the background and privileges play a big role in having success even in sports. It used to be, your background determines where you can go to school, like how you can, how successful you can be in life, in business, in your career. But with Eileen Gu's success, everyone is like analyzing, what's behind her success. And I think her success is really hard to replicate. And it really, I think sadly, there are a lot of, social hierarchies that are here to stay. Like it has solidified more and more, in my opinion. So it's really even harder for, the true middle class to excel and, reach heights beyond, their level. So
Right.
yeah, that's my observation.
Oh, that's great. That's very well thought out, I think. And so does anyone have an additional question before we sign off for tonight? Anyone else? Okay. Well, let's see. What will we do next? I'm just kidding. I was going to do. Oh, Matt and Laurie raised his hand. Okay, Matt, what's your question? Want to put it in the chat box?
I see. So about raising money. Hi. I think raising money is hard for everyone, and we definitely had a not so easy path, especially because we didn't fit into any of the boxes. But that also helped us to think outside of the box and raise money from unexpected places. So a lot of our fundraising came from our public speaking, actually. So we were able to do a lot of that in the beginning years of SoGal, and that helped us reach, a pretty wide global audience that we otherwise would not have been able to reach, including like corporate executives, including like individual investors in like different parts of the world. So we were able to build on some of that momentum and just beg everyone for referrals, recommendations, introductions. We raised funding from a very wide group of people. Our first fund had 97 investors. So you can imagine, how many meetings we took, how many no's we got, and just, the overall process was
That's a lot to manage. I don't know how
Yes.
you manage that, but
a lot of heavy lifting.
a lot of heavy lifting, I would say.
Yeah. But I would say really like being, different and really standing for something different helped us attract, the kind of people who weren't attracted to VC before, they were not attracted to startup investing before, but they believed in what we do and they believed in, investing in women, and, investing in something that's meaningful. Let me close the door 1 second.
Oh, okay. I see somebody has mentioned High Pocket here in the chat box. Do you want to ask a question? Somebody I think who knows you is saying hello in the chat box.
Oh,
Do you know this person?
let's see. Lawrence? I don't think I know Lawrence personally, but
No, that's
right
another
on.
person here. Lawrence is with Invest Hong Kong. But there was somebody who was just saying hello to you. He's in the Q&A. He's in the Q&A. I wonder how SoGal manages and compensates the investors.
Let's see. I don't see this comment. Can you read that again?
Okay,
I see the Q&A.
it's from Afandi, and the question is about how SoGal manages and compensates the investors.
So how we manage it, we have a back office that helps us manage our investors, including sending them capital call letters and sending them the annual finances, and what else? Answering questions related to, the accounting, taxes, and all that. So we have that all covered. How do we compensate investors? I don't think that's I guess, we don't really compensate investors per se. Instead, they compensate us by paying us a management fee and a carry, which is 20% of the profit that we make them. I would say they get compensated by the fact that we create awesome returns for our fund. So so investing in a fund usually generates around like 3x, and we are already like much higher than that number. So it's I think it's safe to say that our investors are very happy with us.
Wow. Okay, very impressive, Pocket. It's very impressive, and wish you all the best going forward. And hope to get you back on the show later, at a later stage when you're older than 30. You're 30 years old, right?
Yes.
Oh, so young. Okay, our next show is going to be with Nikki Skavak from Blackbird Ventures of Sydney, February 24th, 3 p.m. Australia is a little bit earlier. They're a little bit closer to our time zone than China. So we're having it a little bit earlier in his day. And then after that, we have March 2nd with a really all-star group of venture capitalists and experts talking about the China-US tech situation and if a reset is in sight. So we have a number of really great people on that. Jim McGregor, who ran Dow Jones in China for many years and now is at APCO Worldwide. Wei Jiang at Cashlight Capital, who has a fund that is in this whole US-China space. Gary Rochelle of Genki Venture, who was kind of the godfather of US-China venture. Paul Triolo, who is kind of a policy punk and a consultant. He just joined Albright Stonebridge. So that's Madeline Albright's firm. Kerr Gibbs from AmCham Shanghai, and I'm going to be moderating. So March 2nd, 4 p.m. Pacific Standard Time. Sign up, Silicon Dragon reset.eventbrite. And then that will conclude our program for this evening. Thank you all for joining us. Thank you, Pocket, for your wonderful commentary. I really learned a lot. The only thing I didn't get was the name of that company in Austin that is expanding into China. What was the name of that?
Oh, it's called Outer.
Alter, how do you spell that?
O-U-T-E-R.
O-U-T-R, okay. Good, so I'm taking notes. See, I'm learning all the time. I like to learn all the time. So thank you, Invest Hong Kong, for always being there with us. And please join us for our April 26th event, where we're going to be talking about the future for startups in Hong Kong. Hong Kong has made great strides in the startup space. We'll hear a little bit more about that. And again, thank you for joining us. Please join the Silicon Dragon Circle and support us. Okay. And I'm going to say good night, good morning, good afternoon. Salute everyone. Go watch the Olympics some more and enjoy yourself. Thank you for joining. Thank you, Pocket. Take
Thanks,
care,
everyone.
Take care. Bye now.
Bye.